I'm going to be showing you how to know when to take profit and when to cut losses with meme coins. Now, I get this question all the time from my members, my clients, or just people that are in my free group telling me they don't understand when to actually cut losses if they're in a loss, or when to take profit when they're in profit. So I'm going to show you in this video. Now, as you can see, I've got this coin called Henry. By the way, before I actually continue with the video, I just want to let you know most of my videos are raw. I don't cut them. So if you hear me stutter or say or just take a bit long sometimes, just forgive me. But the reason being is I just want to post this as soon as I finish the video. But yeah, on with the video. So as you can see here, we're on a coin called Henry, right? It did quite a substantial pump. It went from about, let's see, it went from about almost, like, let's say 20K market cap. Yeah, so about 20K market cap, 30K market cap, all the way up to 1.8 million, right? I'm not too sure if this was a Pump.Fun coin or not, but regardless of the fact, it did a substantial pump, right? Now, for a lot of you, if you were in this pump, most of you would have probably not even held until 800K or 500K or 400K if you bought down here. Why? Because you don't actually understand when a coin is going to reverse, when a coin is going to start dropping. You just don't understand when the right time to take profit is, right? And similarly the other way around. If some of you bought at like 1.3 mil and it started to dip, you wouldn't know when to actually cut losses because you'd expect it to just continue pumping again because of how high it went. Surely it's going to do something. Well, I'm going to break those beliefs now, and I'm going to show you exactly how I personally take profit and maximize my profits within meme coins. So first and foremost, one of the most important things you need to do when looking at a chart of a coin, or when you're in the coin, is look at the chart. That's first things first. Second of all, is you need to understand patterns, right? And I'm going to show you two different patterns which are pretty self-explanatory in this video. If you're already a trader, you'll know exactly what I'm talking about, but trust me, you are still going to benefit with how I take profit in meme coins. If you don't know what trading is, hopefully you can understand, and just watch the video a couple of times if you don't. Right. So first things first is trends, right? Coins go through what we call trends, right? Now, the most simplest form of a trend, or simplest forms of a trend, are an uptrend and a downtrend. Now, think of these as like a staircase, right? If I draw it here, give me 1 second. If I draw it here, it will look something like a staircase, right? As you can see, it's in an uptrend. It's going up, down, right? Stairs, right? Whereas if a coin is doing like this and this and this, it's not really stairs, right? So you can't really consider this an uptrend, right? This is an uptrend because it's literally like formulating a staircase. That's how you understand whether it's an uptrend or not. Now, that's a good sign. That means it's going to continue pumping as long as nothing creates some sort of reversal, or as long as it doesn't reverse for whatever reason, right? Or unless some sort of news comes out telling you that it's a rug, or causing FUD, or I don't know, Solana drops to zero and it just causes everything to dump. If everything is going well, it will continue to pump as long as the volume is there as well, which I'll get onto next, right? So what do you do in this case when you spot an uptrend and let's say you've bought in around here? What you're going to do is you're going to hold. But you're not only just going to hold on for dear life and hope to catch the top. That is the worst thing you can do, and that's what a lot of people tend to do when it comes to meme coins. And they don't understand that the top traders are always taking profits on the way up, right? Most of the time, when you see these sells at these points, it's the top traders understanding when to sell, right? And this is something that you're going to learn in this video as well. And let me just show you a couple of examples so you can understand that I'm not just speaking out my arse here. I'm actually speaking as to what professional traders do, as well as myself, to end up in the top traders rankings for most coins, right? As you can see, when people buy, especially the people in the top traders, they don't sell once. They bought once, one transaction. Personally, for me, I would always DCA in, which means dollar cost averaging, buying in at different points. But if you only buy once, you don't need to sell once, right? You don't need to take your whole bag all at once. Most of the time, you should be taking it in increments at different levels, right? Because you never know how high a coin can go. And sometimes you're missing out on so many potential gains by selling all at once. So as you can see here, this person, for example, they turned $900 into $9,000. If we see where they bought, let's just see. All right, this is a bad example because they sold first and bought next. They must have bought on Pump.Fun as well if this is a Pump.Fun coin. But let's try use someone else as an example. So let's see this person, for example. Did they buy? Okay, cool. Let's ignore those initial sales. Let's just say their first buy was here, right? What did they do? They didn't only sell, they didn't hold on for dear life and hopefully sell at the top. They sold here, they sold here, they sold here, they sold here, and they sold here, right? But imagine they sold here because they thought, like they sold everything here because they thought, okay, cool, it did its 2x. I'm just going to sell here because I don't think it's going to do any more, right? There's a lot of people selling. Let me just take out here. They would have missed out on this gain, this gain, this gain, all of which were way higher than this. Trust me. Number one rule or number two rule, whatever rule you want to call it, when it comes to taking profit, is don't take profit all at once. Take it in increments. Your biggest priority, first and foremost, is take your initial investment. So if you bought one soul worth of a coin, aim to take that one soul out once you're in profit. Now, ideally, you want to do this around like 100%. So once you're at a 2x and you've made, double what you put in, you can take out what you put in, right? So if you put in one soul into this coin at, let's say, 200K and it's at now 400K, you take out your one soul and leave the other soul in to run. All right. So at least now that one soul, once it gets to 1.2 mil or 1.6 mil, it's now on 3 to 4 soul. Now you might be thinking, oh, but I would have had 8 soul. I would have 7 soul. But what if it just drops right after that? At least you're keeping your personal money safe. Everything after that is basically free money. That's what you want to look at it as. All right. Now, back to the initial point. How do you take profit, or how do you know when the best time to take profit is? You want to take profit at what we call key points or key levels, right? Now, these key points are psychological. I've mentioned this in other videos. If you haven't watched my other videos, go ahead and watch them. But you need to think of psychological numbers that people put into their mind when it comes to selling, right? I'll give you an example. If you buy at 100, if you buy, let's say, at 200K market cap, what are you going to do in order to make a 2x? You're going to sell at 400K. Even if you bought at 212K market cap, you're not going to say, okay, cool, I'm going to sell at 424. You're always going to round it up. That's what most people do. It's based on psychology. So always remember that people are going to sell at psychological levels. Bear that in mind. Now, there's proof in the pudding for this, and I'm going to show you in this video. As we can see, if I zoom in, for example, where are there most sales? 200K. Why? Because that's a psychological level, right? 400K, because that's a psychological level, right? Where's 500K? Okay, 500K, as you can see, there was sales, but the dips got eaten up so quick because of how much volume there was. But as you can see, it touched 500K here, and then it dipped, touched 500K again, it dipped, and then it continued to pump. And again, we can see the same if we approach, where's this? 800K, another dip. 900K, another dip, right? And so on and so forth. If we go to 1 million, another dip. Literally, it's all psychology. Remember, people are taking profit where they think it makes sense in their brain. Bear that in mind. So what do you need to do? You need to not do the same thing. You basically need to sell before the masses sell because of slippage, because of, being able to get the best selling price. For example, let's say you thought to yourself, let me sell at 900K. Look how quick it wicked to 900K and dipped back down, right? Things like slippage and, bots sometimes taking long and so on and so forth. You might have waited for 900K, and as soon as it touched 900K, you actually got sold out here because you didn't sell early enough. What you want to do is bear in mind, okay, people are going to start selling at 1 million. Let me sell around 800K. Because at least if it's pumping, you might get a sell at like 850K and 100K. You don't want to end up being sold at 600K or 500K, right? Because what's the point of you having held all the way to there just for you to get sold out here, right? Bear that in mind. Bear psychological levels in mind, right? Now, on to the next point. That's just how to understand how to take profit in increments. How do you know when to take majority of profit and to expect it to start dipping and dipping for good, or actually dropping substantially as we see here, right? That's what I'm going to show you next, which will then bring me on to the point of how to cut losses in just a second. But let's say, for example, you've now seen it go in an uptrend. I shouldn't have actually cut off those lines, but it's gone on an uptrend all the way up to here, right? How do we know now that it's not going to continue the uptrend? Well, what you want to look out for is a break of that initial pattern, which is the uptrend. Now we see something similar here. I'll be honest, if I was in this coin and I saw this huge dip, I would have thought that it's going to start reversing from here. Why? Because we've almost hit 1 million and it's going to start reversing and it's just going to drop. A lot of coins hit 1 million and they don't actually manage to break past it. But what I would have done is I would have waited to see if it actually does the reversal or not, right? Don't instantly see this dip and think, okay, let me sell here and get out because it's going to continue dipping. No, these will always reverse and then they will continue dipping if they are going to dip. I'm going to show you an example, right? So as you can see here, it dipped. What did it do? It reversed, then it dipped again, right? So what I would have done here is I would have looked at this dip and thought, okay, let me wait for it to reverse. And then if it shows signs of dipping again, then I'll sell around, like, let's say here, right? Realistically, right? But it didn't do that. As you can see here, it dipped, then it actually broke all-time high and continued pumping. This is all-time high, by the way, right? As soon as I see that, I'm like, yeah, I'm holding on to this, right? Or yeah, I'm selling around here because it's almost at 1 million or whatever it may be, right? That's what you want to wait for, right? So let me give you another example. Let's say, for example, you're seeing this dip here. Oops, that's a bit too long. Let's say you're seeing this dip right here, and then we see a reversal. I would now see, okay, cool. It's actually struggling to break all-time high and is dipping again. Let me actually sell here, right? Now, I could easily tell you sell here, but realistically, you're probably not going to end up selling here. It's going to dip too fast. But let's just say I sold here, right? Fair enough. Which then leads me on to the next point of cutting losses, right? How do you know when to cut losses? Number one, spot the pattern. Is the coin in an uptrend or is it in a downtrend, right? If it's in an uptrend, don't worry. It's going to continue going in an uptrend unless it does a reversal. If it's in a downtrend, you want to sell on the retracement, right? So as you can see here, it started a downtrend. As you can see, it's literally staircase, just the other way around, right? Downtrend. That's all it is. What do you want to do? Let's say, for example, you accidentally bought around, I don't know, let's say you bought here thinking that, oh, it's just going to be another dip and it's going to continue pumping, but realistically it didn't. You then see it going down here and then back up here and then it going down again. You now know, okay, we've actually entered a downtrend. What do you want to do is you want to catch a reversal. Don't sell on the down, sell on the up, right? So I'll give you an example. Don't sell. So let's say, for example, you bought here and now you're around here. Don't sell as it starts going downhill. Sell on this green candle that we see going up, because then you can manage to get a sell here and get the most out of your profit or loss wherever you bought. Okay, bear that in mind. Now, this can also help you spot potential opportunities on when to buy, right? So I'll give you an example. If coins don't only reverse from uptrends to downtrends, they also reverse from downtrends to uptrends. Now, how you can tell this is the exact same way. If instead, so as you can see here, sorry if I'm waffling or not, as I said, like, I'm not going to cut this, but I'm trying to give you everything in depth as possible so you can actually understand. What we call these points are higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. That's what we call the staircase trend. When it's on a downtrend, we call it lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, right? Now, what you want to bear in mind is if it doesn't follow that lower high, lower low, lower high, lower low, lower high, lower low pattern, and it changes, that's an indicator that it could actually reverse. So as we can see here it didn't create a lower low, it actually created a higher low. And then what did it do? It created a higher high, and then sort of a higher low and a higher high. We could expect this to be a point where it reverses. So let's say, for example, you see this lower low, and then again, sort of a lower high, not really low high, it's sort of evened out with the previous one. I would have probably bought here. Now, I would have probably made a mistake into thinking that it's going to do a complete reversal because, again, as you can see, it dips. But don't ignore these opportunities, because if I bought here at 543K, I could have easily made about what's that, 70% gain just off of that. And really and truly, I would have taken initials by then, so I wouldn't really have made a loss, right? So if we see how much profit that is, that's 75% just off of that. That's how you can easily just quickly almost double your money by leveraging these trend lines, right? Always pay attention. If you see a reversal, that could be your chance to buy in again. All right. Don't ever buy on an actual downtrend. Buy when you see the reversal. So I would have never bought here because there's no sign that it's going to reverse because it's still doing the normal downtrend. As you can see, it's made another lower low and another lower low. But the second it made a higher low, I would have then bought in and thought, okay, cool. You know what? It might actually reverse here. And then if it didn't reverse, at least I took out my initials. Or as you can see here, it didn't manage to make a higher high. It made a lower high, and then it continued dipping. So I could have easily broken even around here. I've got time, right? There's so much time for me to almost break even. Okay, bear that in mind. Now, last but not least, I know I've spoken a lot, but last but not least, what you also need to pay attention to, and this is probably more important than any other thing that I've mentioned in this video. And luckily for you, you stuck around. Otherwise, you'd be clueless if you don't actually understand this next point. One thing you need to understand is volume, right? Volume is what dictates the trend line. Volume is what dictates what the coin is going to do next. With no volume or with little volume, the coin isn't going to go anywhere, regardless of how nice the trend line looks, regardless of how well the coin is or whatever it may be. If there's no volume, then there's not going to be any sort of uptrend or anything whatsoever. Now, what do I consider volume? I'm not talking about this 17K. I'm talking about everything in total, right? I'm talking about how many people are interacting with this coin live and how much volume is there as well coming in, right? Because if I just counted this as volume and said, okay, 18K volume, what if that 18K volume was made by one wallet? How on earth does that have any use for me as someone who's looking to make profit on it? Because if that one wallet is the only one that made 18K volume, clearly there's no one else that's going to buy, right? No one else is buying, no one else is selling. There's no volume realistically. So I wouldn't consider that only as volume. Or vice versa, if we had 1,000 makers, which is quite a lot, but it was only 5K in monetary volume, that's nothing, right? That's hardly going to move the coin. So take this all into consideration. You need to look at this and think, okay, cool. Does it make sense for a coin that's at 1 million market cap to only have 10K volume and 100K makers? Is that really going to have effect for it to be able to pump? No. I'm telling you this from experience. No, it won't, right? Realistically, for a coin to continue pumping at above 1 million market cap, you need at least minimum 100K volume within the past 5 minutes, minimum of like 300 makers, 400 makers. Again, that's subjective, but like, again, you need volume. You need volume overall. Another way you can determine volume is by these bars at the bottom, which links to this number at the top left corner. As you can see, each and every single bar has volume attributed to it. So this one, for example, has 14.9K, 55K, 15K, 40K. This will help you dictate as to whether or not volume is increasing or decreasing, right? Because here it only shows you 5-minute volume, but here you can, as you scroll through, you can see the amount of volume in minutes, right? So as you can see, if you start seeing, okay, cool, it's gone from 32 to, okay, 28, 55, 15, 40. Like, although it's not increasing like continuously bar to bar, it is increasing as a whole. Every 2 minutes, it's increasing. We went from, 14 and 28 to 55 and 15, right? That adds up more. We went from 15 and 50 or whatever to 40 and 78. That's a lot, right? Big gains. You know that the volume is increasing, right? So pay attention to it. Now, in case you're wondering, okay, so how much volume should I look out for particular market caps? It's very subjective. It really depends, right? But if you see a coin with minimum 500 makers, and it's real makers, by the way, make sure no one's faking the volume, and minimum 100K volume, you know that's a good enough volume. Again, it depends on the market cap. If the market cap is at like 50 mil, that's not really that good of a volume. But if it's at like sub 2 mil, that is quite good volume, right? If it's at 500K market cap, that's good volume. 200K market cap, that's very good volume, right? Expected to pump. But if a coin is at like 5 mil market cap, and it's only got 17k volume, 126k makers. As you can see here, for a 325k market cap coin, it's barely doing anything to it, right? It's barely doing anything. So take that into consideration, and don't look at 6.9 mil in the 24 hour and think, oh wow, that's a lot of volume. Yes, it is, but majority of this volume came in within the first hour of the coin launching. So don't make that make you think. Don't let that make you think that this coin still has potential just because it has overall volume at a high. Okay, but yeah, other than that, if you've got any questions in regards to anything I've spoken about in this video, do let me know in the comment section below. And if you want me to make videos on anything else meme coin related, do let me know. Other than that, subscribe if you like this sort of content, and I'll see you in the next video. Take care.